The topic of today's video is the interest rates which are rising. Hi, I'm Cathy Naiser with the Naiser Real Estate Group here at Keller Williams Realty City View in San Antonio. Thanks so much for watching this video. This video is a little bit different in that I have a guest speaker with us. What happened this week in the financial industry is that interest rates went up. And there's some valuable things that we can learn for buyers and sellers and you about what this means. And so I have with us Holden Hamilton, one of my favorite loan officers from the Hamilton Group, Gold Financial. He is probably the hardest working loan officer in San Antonio and really a brilliant guy. I think you're going to be impressed when you hear him. So Holden, can you tell us a little bit about what's going on with the interest rates?
Of course. Cathy, thank you so much for having me on. It's a pleasure. So what I want to talk to you guys today about is basically what has happened over a 2 to 3 year span. So back in May of 2020, this is when COVID hit, right? This is when everyone started to feel the repercussions of COVID in terms of jobs. And then for us in the housing market industry, we saw, the benefits of it. We were very blessed to be in the housing industry during this, rough time. So what you want to look at is the Fed started purchasing mortgage-backed securities and bonds at about a rate of $120 billion a month back in May of 2020. And this September of 21, they reversed their roll on everything, looked at their budget sheet and said, okay, it's time to sell. So they started tapering bonds is the technical term for it. And they started selling off everything that they've purchased to basically rebalance their balance sheet in a sense. And what that does is that hikes up interest rates along with inflation and unemployment and other, miscellaneous factors that you have within the market.
So as they sell bonds, interest rates on mortgages go up.
Correct.
Okay.
Yep. Buy bonds go down, sell bonds go up. Pretty, on an easy scale. So just to give you guys some reference and numbers over, the last 2 to 3 year span. So a year ago today, your interest rate on a $300,000 home would have been 2.75%, give or take. That would have put you at about $1,163 in principal and interest monthly is what you would have been paying. Come to a month ago today, so almost a year, you look at 3.125%. That puts you at a $1,220 principal and interest, monthly payment. Okay. And then you go to today, which has just been a month, you're at a 3.375% payment. So you're at a $1,259 principal and interest payment. The difference between that and a year ago today, $96 whole. I'd like to keep that money in my pocket. I don't know about y'all. So as economists and as leaders in our industry, we look at where we could put that money elsewhere. For me, I'm either going to put it in real estate or I'm going to put it in the stock market. So the best way to look at it is if I took that $96 that I would have saved if I would have bought a year ago instead of today, and I would have put it in the stock market at an average rate of about 10% per year. If I would have done that over the life of my loan for 30 years, I would have had $218,000 over just that $96 investment monthly. That's nuts. That's crazy.
Wow.
Right? And then you have to look at the appreciation aspect of things. You have homes that are appreciating at about a rate of 7.83% over the last 3 years. A little inflated, but still, real estate appreciates and appreciates and appreciates. It's just on a bigger scale nowadays. So with that, if you would have bought a $300,000 home 2 to 3 years ago, your home today would be worth $376,000, give or take. That's huge, guys. That is so huge. So what I want to put out there is don't wait. Now is the time. We don't want to see where we get to a point where homes are so expensive that we can't buy what we want and what we love. And we also don't want to buy it at an increased interest rate. We want to retain that money, invest it elsewhere, and let it work for us.
So what I hear sometimes, Holden, is people saying, I'm going to wait till the spring or the summer. But the reality is interest rates may be even higher then. Right. So even though it may be a little bit of challenges we have to go through to sell during the holidays, a lot of houses sell in November and December. A lot of buyers buy because it's a very nostalgic thing to buy a home for Christmas. So if you're even considering selling a home or buying a home this year, you could be impacted by this, and it may be, or if you're considering doing it in the next year, call us and let us talk through what would be the benefits of doing it now as opposed to waiting. Because whether you're a buyer and you're going to end up paying more interest rate and being able to buy less house, or you're a seller and so your buyers are a little bit more challenged than we've been used to, or you're a seller that's going to go buy and now you have to have a different interest rate than if you would have sold earlier. That's all impacting you financially. So we'd love to talk to you. We're happy to give you our thoughts and to listen to your concerns. Call us if you need anything. And thank you again, Holden, for being with me today. Thank you all for watching this video. Again, reach out to us so we can help you, and you have an awesome day.
Thank you so much, Cathy.